All right, so what I kind of hope to do is make this relatively easy to follow. So I'm going to try to start with sort of simpler, like simplicity, and then we can move into more complexity. But that being said, the market's kind of doing something interesting right now. I just erased all my zones, which I probably shouldn't have because I had this zone in here. And I'll get to why I drew this zone shortly, but I do want to monitor this because I might want to take a trade. This on the 1 minute chart like would have actually triggered a trade already for me. It would have been structured something like this. Apologize if there's some background noise. There's an airplane going over my head right now. And I'll come back to why this trade why this trade was valid, what the setup was. But it's actually really straightforward. And notice that we didn't wait until after these wicks here were cleared, right? My entry was basically on this candle right here. And that's actually really important to be thinking about as we move forward here. So we just tapped into that area too and then bounced right back up. But we're going to come back to this. I'm going to keep an eye on this chart on my other monitor, and we'll come back to this because I would like a trade setup in here, but it's got to do some stuff first. All right, so Dex, one of our new members, was asking specifically about like how I find my levels pre-market. And it's the same thing as how I find my levels during the cash session. So we're just going to talk about that. So ultimately, I primarily use 4 time frames, 3 for like analysis and 1 for entries. There is a 5th time frame that I look at the start of the day, and I keep it way over here in the corner, which is the hourly. So we'll just kind of start there. So how I find my zones on a very basic level is, if the market's trending up, I look for the last area where it made a higher low and then sort of pushed up from there. And all I'm requiring for a higher low is one candle that comes down below the low of a previous candle. So the moment that, let me zoom in on this. The moment that this candle right here, this kind of doji, poked below this low, that makes this sort of a valid pullback, right? And as long as from that point it moves back up without breaching a previous area, such as this, right? This was the last sort of major low before we started breaking these kinds of structures, right? Structure there that we broke. So once this moves up, this becomes the higher low. So on this hourly chart, if all this stuff over here to the right had not happened yet, I would simply draw a zone where I see these 3 wicks that are kind of prominent. Usually what I'll do is I'll take the highest body, if it's a sort of bullish zone, I guess I would call it. And I'm just going to draw the zone over those wicks. Like super simple, okay? Now, what I like about this simplicity is, and I color code these. So this is a 15-minute. It's going to be, this would be an hourly. So it's going to be this like magenta color. Now, no doubt if we went to a lower time frame, like somewhere in here, there might be a order block, quote unquote, or there might be a high volume node or whatever. There are so many different ways that you can look at this, but I'm looking for simplicity because I scalp. My entry time frame is a 15-second time frame. Like, I gotta be able to process information super quick and simple. So I just draw it over these wicks. And one thing that I want to point out is anytime that we have a 2-candle reversal, so like this candle is a bearish candle and then this one's a bullish candle, and there's no other bodies on either side of these, like we have these wicks here, but there's no other bodies. This chunk of bodies here, I treat the same as a wick, because if you were to bump this time frame up to a two-hour time frame, for instance, that would just be a wick anyway. So to keep my zones kind of broad and all encompassing, if you were to zoom in right here, like this body to this body right there, see there's no other body on this side or on this side. There's just the wick here. So that's, I treat that just like a wick. And if you'll notice, this hourly zone treats it like a wick. Okay. What makes this zone extra interesting is that with only one candle in between, you also have this other wick over here. And that's absolutely something I think about. And we draw this across, and look what happens. We have a wick, only one body, wick, 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 so that's 4 wicks. Remember, these 2 bodies up here where there's no other bodies on either side, we treat as a wick, so that's 5. This wick touches 6, 7, 8, 9, 10 wicks in the span of only 2 bodies in that area. It's a very interesting area to look at as a zone, okay? So on my upper time frames, which would be like the hourly, the 15-minute, the 5-minute especially, that's as simple as I go with the zones. But I don't need all these other wicks to make that valid. It just makes it like an extra interesting zone. Otherwise, I just draw my zone over the lower wicks. And if it's just 2 candles with no other bodies on the other side, I treat that like a wick too. Okay? So that would be like that hourly zone. So basically in my pre-market, I just do that all the way down. And I treat a pre-market hourly zone, I treat kind of like a 15-minute zone because the volatility is different pre-market. A pre-market 15-minute zone, I treat kind of like a 5-minute, cash session zone because the volatility is different. And you'll get a sense of what I mean by that the more we trade together. So like this morning, again, you look at this on the hourly and we have wick, 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 these 2 bodies, which I treat as a wick, wick, wick. So this zone could have been drawn more broadly like this, and it's still perfectly valid. But a lot of times what you'll see me do is, how do I draw this zone where it just captures like the bulk of it, like the bulk of these wicks? Because that's where the most rejection was. And then I view anything past that as like, that was like a really excessive move by the market. Like the real support is kind of around here, and this was like a very extreme kind of move. And that's going to be important to remember when we get to our lower time frames and our entries. So similarly, if we go to a 15-minute and we look at the same area, and what I was looking at pre-market is the same hourly zone is a valid zone here on the 15-minute. And sometimes you'll see, and this will explain this one here and also that 1-minute zone I drew at the beginning of this. So within this hourly zone where it's really like just all these wicks and it's kind of sloppy, but you can tell there's like, it's important, right? You can tell it's important in there. So go down a notch, zoom in a notch. And what we see is a lot of times it's an area that for the most part, right, rejection, 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 rejection. And then here, remember, we treat these 2 kind of candles like a wick. So that's just like a long wick straight through. But you can see the market tried to hold below it a little bit, but failed. Got back above, right? Again, probed below it, but just with a wick, it rejected super fast and got back above. So the main area where the market was inflecting from was not these extreme points. These were extremes, right? This is not where we expect a lot of action. But what we can see is if we start to hold below here, where every other time we've come down low, we've gotten back up very quickly. If all of a sudden you get down here and you're not getting back up very quickly, and especially if we get down here and all of a sudden this time when we try to get back up, the sellers go, nope, and push us back down, then that's very interesting to us, right? And a lot of times allows us to enter in before we breach the extremes because we're seeing that the actual area, which is in here, right, which on the hourly captured most of our wicks. And if we zoom in, you can see how it was the inflection point. Even though we pierced it, it's sort of the main inflection point. That all of a sudden the market's not able to reclaim it. It got below it and it's accepting below it. It's holding below it. It's telling us that where previously anything down here was considered a very extreme move. Well, if the market's hanging out there, then all of a sudden the market must be saying, hey, this isn't as extreme anymore. And that's really important. So look at this orange zone here. And I'll pause in a minute and see if there's questions or whatever. But look at this orange zone here. It's very similar. So, yes, the market got above it, but again, these two candles, I think of just like a wick. These two, kind of the same. Like it just didn't really hang out here and then got back below. And so if I were to look at this and say, if I think the market's going to react anywhere, where do I think it will? Again, if I go down a notch, it's just the same. It's the same thing. We see we reacted. We tried to hold it. We failed. We tried to hold it. It looked really good. Failed. Kept reacting down there between these two areas, between these two areas, between these two areas. You see, so this would have been tricky, right? But I don't trade pre-market. Like this could have easily faked you out and gotten you trapped into a long, and that's fine. Like nothing's 100%. But we can see how like most of these reactions and inflections happened in this area, and anything above that was sort of treated as like an extreme move. Just a very extreme move. And then of course news hits, so that's like a whole different ballgame. Okay. But normally I don't like, this is not like a really key level for me. Like normally I'm looking at, if the market's up, I'm looking at these levels down here. I don't generally trade off of a I don't take the first retest of an old resistance. I'd like the market to at least bounce there once. I take areas where the buyers have already shown that they come in strong. We pushed through this, but the buyers haven't proven their ability to defend it. Okay. So what I'm mostly looking at with my levels is, think of it that way. Where did the buyers play defense? Where was there like, that zone that they don't want to let the enemy breach? And if the enemy breaches a little bit, they're going to try and push them back real hard, real fast, right? Almost like capture the flag, Okay. So we had pushed up CPI, and then you see on this 15-minute, what do? We pulled down here. So technically I could draw this zone like this. Why? Because these two candles right here, there's no bodies on either side, so I would treat it like a wick, but that's a huge zone, so I kind of just drew it down here. But this is valid right there for me. And then I just keep going down time frames, and I go to the 5, and I would say, where are my zones on the 5? So like, earlier in the day, this was a zone because this candle came below this one. Let me color code this as a 5-minute. We'll trace these 5 minutes all the way up. Okay, this candle went below this one and then pushed back up. So that makes that a zone. It also just so happens, again, draw this across, and what do you see? Wick, wick, almost wick here. These two candles, even the bodies are considered a wick, wick, wick. So like I already had this, this morning I was already watching this like this, because just like on this hourly thing here where I said, just draw it where it encompasses most of those wicks, and that you have some wicks that poke out as extreme points, but we're covering like the bulk of the action from kind of where the bodies are, and where like the almost think of it as like from the, if it's a zone underneath price action, from the highest body to the highest wick, kind of, you know what I mean? So going back to that 5-minute, I had the zone here because look at it, encompasses all of these wicks, and then you have these few that poke out as extremes, right? But you can see that once we closed above there, we came up, we retested and held. This was the trade that I was thinking like, man, I should have gotten in that. This overnight high gave me a little bit of trepidation, but you can see that it wasn't getting above this wick and then retesting that mattered. It was getting above this area and then retesting that mattered. Okay. Now I don't care about that so much on my higher time frames, but you're going to see how that comes into play on the low time frames when we think about entries, because that's how we take our entries. So this was a zone, and then once the market did this, I draw the zone here. Why? These two candles up into the point where this body is on the other side of this one, I treat that like a wick. So that's the whole zone there. I just want to be broad as possible. And then as we got up here, this is where things get dicey, right? Look at all these wicks in here. And so you end up with this like giant zone like this. And you can see the market poked below it, probably trapped in shorts, but we're looking at this on the 5 and going like, yeah, the market keeps poking here and rejecting. What we'd want to see before confirming a trade is, can the market close down here and then maybe try and retest and reject, but fail to kind of get back above? And then maybe even close a second candle down here. And that makes it a much more high probability that this 5-minute trend has flipped to the bearish side, right? But in reality, like at this point in time, this would have been a zone because the market came down. These two bodies we treat as a wick and then pushed all the way up. And then we just keep tracking this on the way up, right? That's our last 5-minute zone right there. Now, see, the 1 minute is exactly what I've been talking about. Where if we look at this on the 5-minute, we start to see all these wicks up here. So that's our sign that there's some, once you get like 3 or more wicks in the same kind of like area, like 3 or more wicks overlapping without more than like 1 or 2 candles in between, because like this would be 2 candles, but we consider it a wick. This is 2 candles, but we treat it like a wick up into these other bodies. Once you get like 3 or more, pay attention to that area. And so same thing, we don't draw the zone all the way to here now, because now we're getting into the lower time frames where we want more precision. We'll draw it from like the main bodies. So maybe we could even do it like down here to like, encompass the bulk of the price action. So like this rejection here, this was like the lowest wick. So it's like, the lowest bodies in here are down here and the lowest wick is about here. And that's my zone. It's not perfection. We're not going for perfection. We're just going for like what gives us the highest probability that we're capturing that inflection point, and that sort of does it for me. We want to make sure that we're not, these extremes aren't what matters most. Like that's what I want to stress out. The extremes aren't what matters most. So now when you look at this on a 1 minute, you'll see it's really similar to those other time frames we looked at, where we came up, rejected, 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 pierced it, failed, retested, failed again, got above, tried to hold, right? This could have been a trap. This could have got some people long and you'd get stopped out, no big deal, right? And then same thing again, we kind of get above, but see how it just formed a wick. If we're patient, we go, that's not kind of good enough for me. Came up here and rejected again. This was a little test. And then here finally we get this nice close at the high of the candle, a nice clean retest. And then basically once we kind of take out this, where this first came up before it started retesting, where it tested back into this zone and then takes this out, that's generally my entry on my entry time frame. Right there. Okay. So now what I'm looking at to trade, this is like super simple. So there can't be a 5-minute or a 15-minute zone right above me if I'm trying to go long. Okay. My target has to be clear of any 5 or 15-minute zones above me. Okay. I want to see is what last happened on my 1 minute chart, because my entries are a 15-second chart. Now the market's real slow right now, so a 15-second chart might be too slow, but let's just pretend for a moment. This might be the time frame the time of day where I might enter on the 1 minute chart. But what I need is my 1 minute. If we track our zones, right? This was a zone after we cleared this resistance. Let me get my colors right. 1 minute zones are this kind of teal color. This was a zone. And then once we came up and made that wick, like that's a new zone. And then even here, it's very minor. I probably wouldn't count this, to be honest, but like technically we made a wick. So there is some judgment involved, right? But this would be like the last major zone, really. And then what do we see? 1, 2, 3 wicks up here, right? Remember what I said, when you start to see multiple wicks, like really pay attention, right? So once I see that, I'm not shorting off this zone right here, but I definitely want to be aware of it, because if I'm going to consider longs and I'm anywhere up here, I probably need to wait to just get this clear out of here. Okay, so we had this zone, and what do we see? We came down into it. Yes, we poked below, but immediate rejection. Now, I probably wouldn't have been looking to go long here yet. And the reason why is I'm aware of, okay, let me keep that zone there actually. I'm aware of this zone still. But my rules, and this just keeps me out of a lot of bad trades and chop. Even though this bullish zone hadn't been broken yet, because the market came down and then made a lower high and then broke this, So like this zone now is actually like right over this lower high. You see that? Market was up here. Market was up here. It came down. It didn't break this zone, but it did on its way to that zone make a lower high. So it made a two-leg pullback. My rules don't allow me to enter long until we clear this, or until we make a new higher low. So like if this now comes back on the 1 minute and makes a new higher low, then I can start thinking about longs again, even if that higher low doesn't clear this yet. That's just the way I've kept myself. That's my rules, even though this structure is still technically bullish. And the reason I keep this zone here is because even though this started going bearish, I'm not going to short into this unbroken bullish zone. There's no way I'm going to short into that. So right now for me, the market's in like sit on hands mode. Okay. But let's talk about how I would enter. How I would enter. So once the 1 minute is doing something that I like, it's got zones below us and not zones above us. And like on something like this where it's like, man, break and retest and that looks really good. Or even up here, this might be a little bit cleaner because there was nothing, we didn't have also like these other wicks above us. But then what I do is I go to my 15 second, and any pullback on the 1 minute should create some kind of resistance on the 15 second. So what I mean by that is, if you look on this 15 second, look at these wicks right here. Resistance, 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 resistance. We did get above that, and then we broke below it. And then we tried to get up, and then we kind of came down again. And then tried to get up, and kind of came down again, right? So this isn't really ideal, but this would give me, because we have all these wicks here, this would give me, right, these two candles count as a wick. This would make this kind of interesting to me, that this was a resistance that we got below. We sort of hit it. The sellers tried to push it back down, and the buyers held it again. Once this candle kind of goes up, like to me, that's a valid entry. I'd probably put the stop there. You know, sort of choppy, but it did make it up to that 1.5 hour target. A better example of an entry, let me see if I can find a, these moves down here were actually perfect. They just moved too fast. I couldn't get a fill. Let me go back in time. These here were perfect examples. Okay, this is an ideal model for entry. So I'll show you where this is on the 1 minute first. Right here on the 1 minute. Up, pullback, up, pullback, up. This is where we're going to look on the 15 second. So at this point in time, where was my last 1 minute zone? Well, we had this push up. This hadn't formed yet, so this wasn't yet a zone. My last zone was down here, and it probably would have looked something like this on the 1 minute. Okay. All my 5 minute and 15 minute zones are also below me, so I don't have anything overhead at this point. We're smooth sailing to the upside. This makes this a perfect like with trend setup. And then what we want to see is some pullbacks, which all that means is I need one candle to go below the low of a previous candle on this 1 minute. That's what gets me to then look at my 15 second chart. So that pullback is this right here. So this is the last zone. We pushed up really aggressively and we started pulling back. Now, if we look at this 15 second chart cleanly, what do we see? See these wicks right here, these three wicks? The buyers tried to hold this area right here. We zoom in on this so you can see it really clearly. Because this is basically like my version of watching order flow. It's just watching this 15 second chart. See these wicks? The sellers tried to push it down and the buyers kept defending. And then the sellers got below that area. And then the buyers tried to come up and the sellers defended. That now makes this something where I'm able to look for long entries because now we have confirmed resistance above our head. This is what I ideally look for a long entry, okay? So I was watching this resistance. Now, the market did start kind of making these wicks here, and at one point in time, I moved this because I was like, okay, sweet, this looks like a new sort of lower resistance area. So I would draw this like this. And what I'm kind of looking for, right, you get this, see all these wicks here? Even though it didn't make a lower low, you've got all these wicks. It's enough to make that an important area, right? So I'm watching this. We wicked above, we got back below, we came back up. This happened so fast, I just couldn't grab it, right? And basically, whoops, it's not the tool I wanted. basically rejection, 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 came up, rejection, came up here, actually came back down to close. That's actually your retest. It happened so fast that it's sort of like within a single candle. That was your retest, and boom. So ideally, we try to get in like once this started pushing up, but this thing just flew. This thing just absolutely flew. But once we get up here, try to come back down and can't, fail to, and then push back up. And sometimes that happens like within a single candle. So you actually have to watch how the candles are forming. Sometimes this was so fast. A lot of times you'll get a candle closes up here, another candle comes, forms a wick that taps into this area, and then closes up high, and that's a much easier entry. This didn't give me a chance to get in. I had an order ready. I just couldn't get in, right? But that would be the entry. And then the same thing happened here twice in a row. I put this in the Discord. I was like, I missed it again. Because what do we see? See all these wicks across here? The market formed a ceiling, right? And then again, the market started to form this ceiling here where it came up and the sellers were like, no, we don't really want to let it go high. That's too high. That's too high right now. And I was looking for this area to do the same thing. I was looking for price to kind of come up here and just hold and then maybe give a little retest and then go. And then this candle just launched right through. Now notice we did get a retest ultimately. Okay. We did get a retest ultimately. So that's where on the 1 minute over here, right when I started this stream, you can see how this is just a larger fractal version of what we were just seeing on the 15-second, where you have all this resistance here, and then you finally get a clean close above it, another close above it on this candle. Honestly, you could actually enter. You could enter when a second candle closes above. I like to wait and see if we get a retest, and I like to see the buyers defend. And so at that point, once you clear this high, where we saw this time the sellers were not able to bring it back down below, that's different from every other time that we've gotten above here. The sellers were able to quickly bring it back below within one candle. This time, we had one candle close, two candle close, three candle close, and a rejection. That's very different from what's happened every other time we've been up here. So if this were on a 15-second chart and the 1 minute chart was bullish and I was looking to enter, and especially if like the 1 minute chart had already come down, maybe this had looked like this on the 15-second and then done all this chopping around and formed this zone and then did this retest and go, like that would be a really perfect entry for me. So you could do it on whatever time frames you want to. The key is for me, my key is the entry time frame. I only take entries in the direction of basically the one time frame above. So for me, at the cash open, I'm looking at a 15-second chart. So the 1 minute chart has to be making higher floors and not lower ceilings if I'm going to go long. That's why in here, I wouldn't have taken this trade. It would have been against my rules at that point. However, this isn't really a pretty setup to me, but this wick did come above. We did break this zone and then formed this zone here. This was a pullback. We didn't really need to wait for this pullback because the last actually valid zone was still back here, and then we broke structure, right? But as this pullback was forming, once we saw this forming, we're going to look down to the 15-second. Let me find that spot on the chart. And I would see if it offers me any entries. Now, in this case, that pullback was so fast and small that it didn't really offer a good entry. Again, what we might look at is these 4 wicks right here. And then notice you have to really train your eye to look at this stuff, because rejection here, kind of tried to reject, got up, got back below. This candle came up and tried to come back down again, and then the buyers reclaimed it. You got this wick that came up, and then that wick coming down, right? That candle closing like that, but still above this zone, was actually your retest, and then this went up. So the entry would have been as we went back up here. I put my stop under. I want to find a low point underneath the zone. So I'd put it like that or like that. I don't want to hug the zone, because very often there might be another test, like this wick here. Tested that zone again and it held. And that would be confirmation. Sometimes on my practice account, something like this happens, and that's where I might add a contract to the trade because the buyers still showed willingness to defend that same area, and I might add a contract there and add it onto my first target. But the zones are really, to start out, what I would simply focus on, like this 15-second chart is too slow right now, or too fast right now for the market. The market's going too slow. It's just really funky looking on there. But all I would look at to start with, if you want to simplify, is look at anywhere where the market went, or the price, if the price is going up, where it goes below a previous candle and then back up again. And that's your zone. And if there's two bodies or portions of bodies that don't have other bodies immediately on either side, then just encompass that too. You may as well, right? That's how I draw my higher time frame zones. And then on my lower time frame zones, it's more like which is basically for me the 1 minute and the 15-second. It's going to be more like this stuff here, especially on the 15-second, where I'm not capturing all the way to the end of the wick. I want to capture like where was the real inflection point, because I want to know when we start holding over that inflection point. Okay. But another way to simplify, if you're not good at figuring that out within all this mess, another easy way to simplify, like if I were to look at this on the 5 minute, and let's say for instance, I'm looking at like this last 1 minute zone, the way this pulled back here, this actually makes a valid 5 minute zone right here. Okay. And let's just say this were like my lower time frame, and I wanted to be more precise than this, where I say, hey, if the market holds below a certain area and kind of retest, like I might want to think about jumping in there. And if you're not good at like going down and looking at this on a fractal level and finding where that might be, which in this case, by the way, would probably be this same area across here. Okay. But if you're not good at that, or if you want to simplify in the beginning, just draw your zones this way, just over the wicks or the two bodies, right? And then use your fib tool and just find the halfway point. And usually that's going to be pretty darn close. So if we go back down here, look at the level that I had on my 15-second. It was right here. It was right here. See how that's 50% of on the 5 minute, like those 50% of what we would call the wicks, right? It's all we don't need perfection, guys. You know, like we need like a reasonable approximation. We want to keep things relatively simple. So as a beginner, that's what I would say to focus on. You know, as another example, like if I was looking at well, let's take one of these entries over here that I was talking about on the 15-second. Okay, and then I'll kind of go back to the live market and we'll just watch some live market action. But let's go back to those trades that took off on me that I wasn't able to catch. Where the heck did those things happen? Those were right here. Again, you know, I'm looking at my zones, you know, and I'm like, hey, this is the zone right here. Like I need to hold over this. And you notice I'm not encompassing these wicks, right? Or even on this one, kind of same deal. Like I might draw it kind of like this, because we got these two bodies and then this wick here. But if you want to keep it simple, just draw it over all the wick, like all the wick, and then find like roughly the halfway point. And it's going to be pretty close to the way that I draw my box. Like it's gonna be pretty darn close, right? Like that's my box normally. But if I were to draw this over like this whole wick, for instance, here, the 50% point would be like right about here, which is basically right where I have my box, right? So if you just drew it over this whole wick right here, as the market started to make that ceiling, 50% point, pretty simple, you know. But usually you can dial, if I were to, like, I don't ever go in closer than a 15-second time frame, but usually if you were to dial in, like that's where this line was here, that's from that 5 minute zone that we were looking at. You know, it's pretty straightforward. And like that's my trading in a nutshell. So like let's just say for instance, because the market's moving slower right now, this is a 5-minute chart, but let's just say this that my entry time frame instead of a 15-second was a 1 minute. So my analysis would be I go look at the 2 time frames above, the 60, and I'd say, are there any zones above me? No. 15, no zones above me. Great. 1 minute, or this 5-minute would be, the last valid zone is here. Well, let's say that hadn't happened yet. Let's say the last valid zone was here, right? Again, wick below the previous candle. And once we have all those conditions, all we're doing is waiting for the next pullback on this time frame. So this is the 5-minute, assuming that my entry time frame is the 1 minute. I'm waiting for a pullback on the 5-minute. The requirements for a valid pullback are either, and usually it's going to be both of these things, you get a candle that goes below the previous candle here, but often what that's going to mean on your entry time frame is you have a break of structure and some ceilings being put in on the entry time frame. That is a mandatory requirement. Okay, now there are some other nuances, but we're not going to get into that right now for like a little bit more advanced trade setups, but all we're looking for is like that's enough. And then we go to the 1 minute where that occurred, and we look for our ceilings. So this is the pullback that we're looking at. And so what do we see here? We've got these 3 wicks that came across here, and we made this ceiling right here, right? And then this here you might actually consider. It just depends how aggressive you want to be. But let's just say we want to be conservative. We'd look here. And so what happened? The market got above it, but wicked down, so no entry yet. Got above it and held, and then came down and retested. So this is actually a perfect entry on this entry time frame. I'd put my stop there, and that's your trade. I always put it. Notice there's a low here, but it's in my zone. I want to be below my zone, because what this means is, notice even if I entered on when this candle bounced back up, this one wicked back down again. That could still happen again. We still have these upper wicks. Once this moves enough, which it almost always is going to move a little bit more, then I can close my risk and still keep my target the same, but now my risk is a lot tighter. And that's how I get those really good risk rewards in my stats, right? And then basically what I'm doing is I'm going like, hey, are there any new zones forming? Yes, this is a new zone. Great, so I need my stop now just to be below that one. This I would count. This is a little bit more advanced. Even though it didn't make a swing low, it gives me 3 wicks, and actually 4 wicks with only one body if you count this wick right here. Right? In that area, we have 4 wicks in one body overlapping. That's a valid zone. So now my stop goes there. Right? Actually, even here, wick, 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 and only one body, I'd bring my stop up there. And then as this is forming, I want this to make sure this holds up here, so I probably wouldn't have moved my stop yet because we haven't cleared this next resistance, but then eventually I would move my stop there. It's really that simple. It's really that simple. And just making sure there's no zones above us just keeps us out of choppy crap. Like this morning when the market opened on the 5-minute, I had this as a zone. And so even though, we broke down and then we came back up, and there were actually some buy setups in here. I'm going to have to clear all my drawings. This is getting to be really messy. This was a buy setup in here. But where's my zone? Okay, hold on. I need to color this 5 minutes so I don't confuse myself. We'll get rid of this for right now. Okay, so I had that zone. This was a buy setup, but again, I don't like to take a long if I have a 5-minute zone above us, because on the 5-minute, this was all these wicks, and I actually had this a little bit lower. I had it kind of like this, right? Like something, at the time I had it something like this or like this. And so we'd go, okay, the 1 minute's giving us, it's pushing up, right? 1 minute looks great. We broke This was our last 1 minute ceiling, right? This is the last place the sellers defended. I color code this. I'll show you exactly kind of what happened this morning, how my analysis went. Now, knowing this is way up here, as the 1 minute started to create also floors down here. See all the wicks? And this technically made a higher low as we pushed up, and then another higher low here as we pushed up. I can actually look for long trades, but I got to stop looking once we get close to this last zone here. But once we actually cleared that, again, I'm now safe again to look for long trades because we broke that area. But the problem was on this pullback right here, by the time we get an entry on the 15 second, so bear with me to go backwards in time on the 15 second. Okay, so this was where I'd start to look for an entry. So what am I looking for when I start to see that 1 minute pullback? I'm looking for ceilings. There's a ceiling, and then we created a new ceiling right here. And so I'm looking to see price hold above this, which it kind of did, and probably far enough that if I really wanted to, when it's that strong, sometimes you just say it's not going to retest, you just got to jump in. But at the very least, my stop would have had to be here. At the very least, under all these bodies. This was kind of a little micro swing low. And now look where my target is. It's not only in the 5 minute zone, which ideally it needs to be before it, but it's actually even above the 50% mark. And depending on, like, my minimum target's 1.5. So I think when I marked this off in the live session, I had my entry like that. And I was like, oh, that would have hit my target. But I said, but it's luck because it just so happened that I would have maybe got my fill there. And I decided to put my stop here. What if I did decide to put my stop 2 ticks lower? All of a sudden, maybe I don't get a fill. Or if I don't get as good of an entry, all of a sudden I don't get a fill. Now, the market did ultimately continue up, and it would have worked out just fine. But look how choppy things got once we got into that 5 minute zone. So those rules keep me out of chop a lot. Same thing here. Let's just pretend that this is a 15 minutes. Let's pretend that like my 5 minute is my entry. Well, we got the 15 minute pullback. So on the 5 minute, you know, where's the last, let's see, where is that? Right here. Okay. Where do we make ceilings? Well, look at all these wicks here. And then we kind of want to be more precise than that. Let me zoom in here. Let me put my coffee down for a minute. And so once we get it here, which again, if you were to draw a fib from like the lower part of my zone to the highest wick, it's about that 50% point. I'm going to actually draw a line. I'm going to draw a yellow line at that 50% because you can see how you can kind of just use that as a cheat if you don't know how to draw zones really good yet. Because once we closed above that 50%, what did we do? This wick came down and retested. Notice it retested my zone like to the tick and then pushed up. So if I was trading this time frame, I would have been making sure the 15 minutes bullish. So the last thing the 15 minute did was make a floor and break a ceiling. It's the last thing it did. And then I go down to the next, my entry time frame is 1 step below. I wait for that pullback. I find a ceiling. This is the most recent ceiling. We get above, boom. So the entry is above this bar. As price pushes above this bar, I put my stop there, and that's the target. And these are really high probability shots. You know, you can be more aggressive. You can look at the floor down here and say, hey, we pierced below it, and look what happened. We got back above, and this time we retested, and you can try to enter here. But me personally, I'd rather see us because we did create this ceiling here. I need to see that ceiling break and create a new floor. And that's my entry. Simple, simple, simple. Rinse and repeat, rinse and repeat, rinse and repeat.